Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing world of corporate filings. Today we're diving into a report from Nuburu, Inc. This one is a bit like realizing you've been doing your taxes wrong for years and now you have to fix it. Let's see what's up. This report, filed on April 15, 2025, is an 8K, which is basically a company saying, hey, something important just happened and we need to tell you about it. In this case, it involves a mistake in how they previously reported their financial numbers. So they are redoing those numbers. Nuburu realized that some of their past financial statements were not correct. Specifically, this affects the financial statements from the year ended December 31, 2023, and the first 3 quarters of 2024. This means that anyone who made decisions based on those old numbers might have been using the wrong information. The company is now saying that those numbers should not be relied upon. There are 2 main problems. First, the company made a mistake with how they accounted for something called debt issuance costs related to junior notes. Instead of listing these costs under interest expense, they put them under general and administrative expenses. This is like saying you spent money on office supplies when it was actually a cost of borrowing money. This mix-up only affected how the company's profits and losses were reported and did not affect the company's assets, debts, or cash balances. The second error involves something called senior convertible notes. These are basically loans that can be turned into company stock. In late 2023, some of these notes were exchanged for something else. The terms of the exchange said that any unpaid interest from when the notes were first issued should have been added to the principal balance, like rolling over the debt. But Nuburu didn't do this correctly. The principal balance or initial loan amount was understated and the accrued interest or accumulated interest was overstated. This impacted several parts of their financial statements. Because of this, Nuburu is restating or fixing these previous financial statements. This means they're going back and correcting the numbers to make sure everything is accurate. It's important to understand how these changes affected specific numbers. Let's look at a few key areas. First, let's look at the balance sheets. As of December 31, 2023, accrued expenses were originally reported as roughly $2.75 million. But after the fix, that number dropped to around $25 million. Then for convertible notes payable, the original amount was $6.7 million, and after the fix was almost $7 million. After the fix was almost $7 million. Finally, accumulated deficit went from roughly negative $97.2 million. Finally, accumulated deficit went from roughly negative $97.2 million. After the fix was almost $7 million, and after the fix was almost $7 million. Finally, accumulated deficit went from roughly negative $97.2 million. 20 accumulated deficit went from roughly negative $97.2 million. Finally, accumulated deficit went from roughly negative $97.3 million. Moving to March 31, 24, accrued expenses went from $3.2 million to $3 million. Convertible notes payable increased from $6.7 million to almost $7 million, and $2.9 million to $9 million. As of June, accrued expenses decreased about $200,000 to $4 million. Convertible notes payable increased again to $5.5 million. Accumulated deficit went from negative $115.6 million to negative $115.52 million. September 2024, accrued expenses decreased again to $4.1 million. Convertible notes payable increased again to $4.6 million. Accumulated deficit went from negative $120 million to negative $120 million to went. Now let's look at the effects on the consolidated statements of operations for the year of 2023. The general and administrative expenses were originally reported as $11,1027 million. It was adjusted to roughly the same amount of $20.1 million. Interest expense was initially $74,000 but increased to $84,000. The net loss before taxes was previously $24,000. That increased to $84,000. That increased to $64,000. The net loss before taxes was previously $24,000. The net loss before taxes was previously $24 million. Was adjusted to roughly the same amount of $10,20,571 million. For the 3 months ending March of 2024, general and administrative went from $2.8 million to 2 taunts went from $950,000 to $1,507 to 1.1 million Dafre, and net loss went from roughly negative $5.7 million to negative $5.7 million when of 3 months ended June, general and administrative went from $2.1 million to $1.9 million. Interest expenses increased to $1.1 million. Loss on extinguishment of debt decreased slightly, and net loss before taxes went from negative $12.6 million to the same amount. 6 months ended in June, general and administrative decreased roughly $500,000 to $45 million to $45 million to $4.5 million to $45 million to $40.40 in pence. In September of 2024, general and administrative decreased to $1.7 million, and net loss stayed the same around $4.3 million, and net loss stayed the same around $4.3 million. Finally, in 2024, general and administrative decreased over $500,000 to 6 pence, increased roughly $500,000 to $3.3 million. Interest expense increased roughly $500,000 to $3.3 million to $3.30 and $3. On the consolidated statements of cash flows for the year ending in 2023, the net loss was originally stated to be $20.71 million. For the 3 months ending in March of 2024, net loss went from $5.7 million, went from $5.7 million. 6 months ended in June, net loss went from $18.3 million to $18.3 million. Adjustment to reconcile net loss to net cash increased to $10.22 to net cash increased to $10.20 value. And again, for 2024, net loss and the adjustments changed slightly as well. These numbers, although not huge, are significant, and the company did have to restate them. The company said that these mistakes were due to a weakness in their internal controls over financial reporting. This is a fancy way of saying they didn't have the right procedures in place to make sure their numbers were accurate. Nuburu is working to fix these internal control problems. So what does all of this mean? Well, it's never good when a company has to restate its financials. It raises questions about how well they're managing their accounting processes. However, the company is addressing the problem, which is a positive sign. On the bright side, the errors weren't massive and didn't significantly change the overall financial picture. However, accuracy is key, especially when investors are making decisions based on these numbers. As for Nuburu's direction, the misstatements point to a need for stronger internal controls and oversight. While the company is taking steps to correct these issues, it's something to keep an eye on. One risk is potential damage to investor confidence. On the opportunity side, addressing these issues head-on can rebuild trust and set the stage for more reliable financial reporting in the future. In conclusion, while the news of restated financials is concerning, Nuburu appears to be taking the necessary steps to address the underlying issues. It's crucial for them to strengthen their internal controls and maintain transparency to regain investor confidence. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, don't forget to like, comment and subscribe for more insights into the world of corporate filings.